Hello, welcome to the European Open briefing for Wednesday, October the 26th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be looking at the latest developments in the currency markets today. So the dollar is still holding strong at near 3-month highs versus the yen, and this comes on the back of we're seeing continued growing expectations that the Fed will raise rates in December. The biggest mover yesterday came from sterling, which tumbled below $1.21, but it's since recovered back above that level after Mark Carney yesterday, when he was speaking in Parliament, he said that the Bank of England will take into account the exchange rate when setting monetary policy. This morning we've seen big gains for the Australian dollar following the release of stronger than expected inflation data for the third quarter. And we're seeing crude oil prices going back down again after US crude stocks yesterday. Data from the American Petroleum Institute showed that US stocks rose much more than expected in the prior week. So let's begin with the dollar. We can see yesterday the dollar made big gains against the yen. It rose to a 3-month high of 104.87. It's since eased back on mainly on profit taking. But the dollar is still underpinned by growing expectations that the Fed will soon be raising interest rates. A good indicator of what the markets are expecting, what the futures markets are pricing in, is the CME Fed Watch tool. That's currently pointing to 78% probability of a rate hike in December. So that's likely to keep the dollar strong over the coming weeks. We had some mixed data yesterday, though. We saw a drop in the consumer confidence index in October to 98.6 versus expectations of 101. We also had some housing data, although housing data was broadly positive. Now let's look at what happened with the pound. We can see this big drop yesterday. The pound fell to 2.5-week low of $1.2081. There wasn't a particular reason for that slide. It was a combination of factors. We of course have the ongoing concerns about Brexit, what's happening with the political scene in the UK, how the trade negotiations are going or how they're not going, and also we had some comments from the British Finance Minister Philip Hammond. He yesterday said that he does not see any reason why the government would turn down a request by the Bank of England for further bond purchases if the Bank of England decides to expand its asset purchase program. So that drove the pound lower as it increased the chances of more QE in the UK. Although later we had the Bank of England Governor Mark Carney speaking in before a House of Lords committee. He said that there's a limit to the bank's willingness to look through inflation overshoots. So basically saying that if the pound falls too quickly and too far, then obviously that would be taken into account in terms of policy decision by the Bank of England. And this supported the pound higher. The pound rose back above $1.21, although it hasn't been able to hold above $1.22. It briefly jumped above 1.22, though it's since eased to around $1.2176. So yeah, basically the sterling is still fairly volatile as we have ongoing developments with what's happening with Brexit. A big mover today was the Australian dollar. We can see this big jump upwards. It rose to a near 1-week high of 0.7708 against the US dollar. This comes after Australian inflation was slightly stronger than expected. CPI in the third quarter was up 1.3% year-on-year versus expectations of 1.1%, and this was higher than the 1% in the second quarter. So this dampens expectation that the RBA will cut rates again, although core inflation remains fairly subdued. There's two core inflation measures in Australia. We've got the trimmed mean that was in line with expectations at 1.7%, and the weighted mean was slightly weaker at 1.3 versus expectations of 1.4%. So this is a sign that although the RBA may not cut rates in any time in the near future, it's unlikely to raise them either unless core inflation shows signs of picking up. Although in the short term effect on the Aussie is of course it's positive because it's unlikely that there will be another rate cut in Australia at least before the end of this year, and probably not until in the second half of 2017. So that's likely to support the Australian dollar over the coming weeks. Now let's look at what's happening with oil, because we saw that quite a bit of a slide yesterday in oil prices from around $51 per barrel level to below the $50 per barrel level. It's currently just around just below $49.50 a barrel. This comes after the API data, that's the American Petroleum Institute. This is the unofficial inventory data. The official is, of course, the numbers from the Energy Department in the US. So the API data yesterday showed US crude stocks up by 4.8 million barrels versus expectations of 1.7 million barrels. So there's quite a difference between the actual and the forecasts. So that weighed on crude oil prices. But we also have some doubts as to what will happen with the upcoming meeting between OPEC and Russia. There is some bickering between OPEC members as to how the cuts will be distributed. Iraq does not want to be forced to cut its output, given that other countries such as Iran, Libya, and Nigeria are to be exempt. And also Russia is giving mixed signals, because on the one hand it's supporting a deal, on the other hand it does not want to cut its output. So Russia is looking like it would prefer a freeze rather than a cut. So all of that is weighing on crude oil prices this morning. Now let's have a quick look at today's economic calendar. We can see here the Australian data out earlier. We had some consumer sentiment data out of Germany. It was slightly weaker than expected. The GfK Consumer Sentiment Index came in at 9.7 versus estimates of 10. We also had import prices. They were slightly stronger than expected. But it's fairly quiet apart from that up until the US session later in the day, where we're going to have the market services PMI. That's expected to remain unchanged at 52.3. And we're also going to have new home sales, which is expected to again be slightly more or less flat, slightly weaker from 0.609 million to 0.6 million in September. That's it from me. Thank you very much for watching, and have a great day.